Welcome back. More earnings interactions. Gokaldas exports reported a good performance in Q4 and FY25. Top line growth was about 25%. Siva Ramakrishnan Ganapathi, Vice Chairman and MD of the company, is now with us on the show. Thank you very much for joining in. 25% revenue growth year on year, 3% on a quarter-on-quarter basis. On a year-on-year basis, what was the impact of the acquired entity? And going ahead in FY26, what's the outlook?
So the acquired entities have started performing well, and between Atraco and Matrix, we had about 850 crores plus another 450 crores. So about 1,300 crores come from there out of the total 3,900 crores. So that's the kind of split of revenue coming from the acquired entities. All of the entities have grown. The base business itself has grown substantially. Where the erstwhile Gokaldas itself has grown pretty strongly, both in Q4 as well as for the whole year, and we have been growing at a much faster pace than the rest of the industry.
Okay, all right. Hi, sir. Good to see you, Ben. Just to clarify, one acquisition that you made was BRFL, right? That hasn't yet contributed in the past year.
No, we have just made an investment. We have not acquired them as yet.
Not acquired.
Them. That's right.
All right. So got that. Now, if you could tell us what is the current order book, if you could give us a brief idea, because that gives us some kind of visibility going ahead.
So the order book is strong, and we have booked all the way till the second quarter. So we have a fairly good amount of order flow happening. There are certain concerns from the customer side with tariff and uncertainties, etc. But we seem to have been overcoming that and generally having a reasonable state of booking. So we don't have as much concern, though. I feel that in the longer run, I think given the macroeconomics and the geopolitics that is going on, India should be in a stronger position, especially with UK FTA happening. Hopefully, an FTA with EU and US also, tariff agreement being reached. Then we will see better traction. In the interim, in the short term, tariff may play havoc with short-term business. We will have to just deal with it. We will have to contend with those uncertainties and manage the business through that period.
Okay, all right. So, the last time we spoke, you said that India is better off if you compare it with other countries, China, Vietnam, Bangladesh as well. Is that still the case? Given the sudden talks between China as well as the United States, has some of our edge got taken away?
So China, it was impossible for China to export anything to US when the tariff was at 145%. Now that it has come down to 130%, there is some trade resumption between China and US. Having said that, a 30% tariff is still high, and we will definitely have an advantage over China. But what's important to say is how does the tariff eventually play out for other competing countries like Vietnam, Bangladesh, Indonesia, etc., because that's where bulk of the larger customers have pivoted already to. So the relative tariff post this 90-day pause window is what will determine, in the longer run, who will have what advantage. At the moment, there's a level playing field for everyone in this Asian region, barring China.
You had guided for improving EBITDA margins to 12%, and I think you've achieved that. Now, going ahead, what is the outlook on EBITDA? Can you further increase it? And considering you get about 70-80% of the, your revenues from the US, and there are going to be tariffs to some extent, what are your conversations with customers like Gap, for instance? Are they asking you to bear a part of the impact?
See, all customers are asking us to bear an impact of the tariff. So in the short term, which is say the first half of this year, when the tariff will be in play. For example, the revised tariff or reciprocal tariff started from April 9th. So it's impacting Q1. So we do have to share some amount of our margin with our customers. The supply chain contributes to bearing the tariff as well. So in the interim, to keep up our relationships and to make sure that we continue to grow, we will have to forego some margin. So Q1 and Q2, we will have some, setback on margin. So this year will have some tariff related challenges. If I exclude that, I don't see any problem for us. We will continue our growth journey both on top line and on the margins. But tariff will certainly impact our margins. Tariff will also bring in volatility of business volumes. At the moment, we don't know what the tariff is after July 9th, after the 90-day pause window. So will it go back up to the 26% announced earlier? Will it stay at 10%? Most of the customers who are placing orders today will receive their goods after the tariff pause window.
Yes.
So how do you place an order now without knowing clearly what is the tariff at which you're going to clear the goods when it comes into the United States? So this is a big concern, and that brings in a short-term volatility. But we are building the business for the long term, and when you look at the long term, we don't seem to have those kind of concerns. In the short term, we definitely will have this problem.
So, say for H1 of FY26, what's your own expectation of EBITDA margins?
It's very difficult to predict. I'm sorry to say that, because I don't even know what's the tariff going to be in Q2. So how can I predict that margin? How do I know what kind of burden share that we are talking about in the second quarter? Our endeavor will be to protect our margins as much as possible, but we are living in an uncertain times where we don't even know what are going to be some of the tariffs. So it's hard to predict margins in such an environment.
Fair enough. Okay, but you are sharing some of the burden with your customers, and that could keep your margin subdued. That's the key takeaway from that. Okay, you'd also spoken about a 15% kind of a revenue growth driven by a strong order book, sourcing trends, etc. Is that on track?
So again, long term, 100% it's on track. Short term, there will be some aberrations. When I say Q1 and Q2, there could be some order flow hiccups, primarily because customers themselves are unaware as to how the tariff is going to impact them, and hence how do they go and build up their inventory. So if I buy now for holiday season, which is the winter season, most of the production will happen in Q2 of our financial year. What is the tariff?
So orders have been paused, sir?
Orders have not been paused. Orders are coming through, but the brands are just concerned about the order flow. So they may trickle it down. I don't see an order flow problem, but I see some volatility again because of unknown tariff.
And ROCE, you had plans to, I think, scale it up to 20% plus.
Yes.
When does that happen?
I think it'll take 2 years, and it will happen. One of the reasons why ROC is showing a slight dip now is because we have made investments in several capexes, capacity increases. So we are also trying, filling up those capacities. So planning to do that, and those have yet to come on stream. So these are all capital work in progresses, as well as our investments in the textile unit BTPL. Has contributed to capital outlay, but we are not counting any benefit coming out of it. It's just an investment. So ROC will improve as we progress. I think in FY27 we should start seeing a fairly strong ROC again coming back to us.
Pleasure talking to you, sir, as always. Thanks a lot for joining in. Hopefully next time around we'll have further clarity with regard to what's going on in the globe, and you can give us some more concrete guidance on the path ahead. Thanks a lot for joining in.